Despite disruptions from the pandemic, the U.S. title insurance industry saw significant premium growth in 2020, the segment's largest annual increase since 2012. I'm Lori Chortis for AM Best TV. Here to discuss a new AM Best report on the title industry is Kourtnie Beckwith, a financial analyst, and Ann Modica, Associate Director, Credit Rating Analytics, Research and Criteria. And the housing market has been red hot. Can it sustain itself at these levels?
Hi, Lori, and thank you for the question. Yeah, the housing market has been on quite a tear this year, really since the third quarter of last year, as demand for homes far outpaced the supply. This resulted in record pricing appreciation in some areas, but, we believe the rate of appreciation is unsustainable over the long to medium term, and we expect this to moderate over time. I'm just going to take a quick look at the what caused the pricing appreciation. Housing supply not keeping up with demand really dates back prior to COVID, but the pandemic just really exacerbated it. Demand for housing increased during the pandemic for a variety of reasons, including the desire to move away from populated areas, the need for more space as people were working from home, schooling from home, and obviously the lower mortgage rates made the cost of borrowing for a home even cheaper. And all these factors added to the existing demand that was out there prior to COVID. And during the same time, as demand was increasing, supply was being limited due to lower new construction and people not listing their existing homes. So looking forward, we believe that housing demand will remain strong, but not at the same pace we've seen in the last year and a half. And we have seen signs of this moderating as pricing begins to decelerate in some areas and more inventory becomes available.
Kourtnie, did the pandemic have any impact on title insurers' upfront costs?
Great question, Lori. The title insurance undoubtedly has heavy upfront costs, which benefits both the policyholder and title insurers. They incur substantial costs because of personnel expenses, the cost to service abstractors and attorneys, coupled with the involvement of highly specialized title agents. However, because of all the mitigation that takes up front prior to policy issuance, the title insurance does experience very low loss ratios. As for your question, during the pandemic, the upfront cost has remained relatively flat or slightly higher due to volume, and that's because of premium. In general, you could say that the title insurance indirectly benefited from the pandemic as we are in a low interest rate environment, and then home buyers decided to relocate out of some of their major cities, right? And so when the current homeowners looked to refinance, they were able to refinance at lower rates to take advantage of things such as a reduced term, some home projects, renovations that they always wanted to complete, as well as consolidating debt, amongst other things. And so with title insurance, the revenues are a little bit higher when it comes to home loan originations, simply because they're based off of the home value, compared to refinance, in which usually there's some equity in those loans, and the loans have a lower amount.
So, Ann, are there any areas of concern for the housing market? For example, are first-time home buyers being left behind?
Yeah, so affordability is definitely a concern, particularly for the first home buyers. And this is being driven by the lack of inventory and the run up in prices. While builders have started to increase production to meet demand, we still have supply chain bottlenecks, goods shortages, and increasing construction costs. And that has really limited the pace of new construction growth. Goods like lumber have moderated and returned to pre-pandemic levels, but we've seen other pricing pressures for other materials persist, particularly for labor. There are a lot of construction jobs currently open. I'll just mention one other concern, and that's the expected increase in mortgage rates will also affect home affordability. The Federal Reserve has started to signal that they will start to pull back on some of their extraordinary monetary support that it implemented last year. In March of 2020, they cut the Fed funds rate by 150 basis points, and they also started buying about $40 billion a month of mortgage-backed securities. in order to provide liquidity, and this also keeps mortgage rates low. So many believe that the Fed will start to taper purchases probably sometime in the beginning of next year, and then they'll start to gradually increase the Fed funds rate if and when the economy continues to improve, and these actions will drive mortgage rates higher.
The title insurance market is noticeably top heavy. Kourtnie, is there room for new entrants or smaller players?
Another great question, Lori. And so, as you know, the title insurance is in fact top heavy. We are used to the coin term, the big four, which include Fidelity National, First American, Old Republic, and Stewart. And so they've dominated the industry since 2011, but we've seen that they lost some of that market share to some of the smaller players and new entrants over that same time. There are some customers who choose to do business with the regional carriers. And so that's how some of the smaller title insurers and new entrants are able to gain some of that momentum. Also, in the past couple of years, we've seen the entry of DOMA, which was founded in 2016. And DOMA specializes in digitizing and streamlining the closing process. And actually, in March of 2021, they did enter a definitive business competition agreement with Capital Investment Corporation to bring intelligence technology platform to the public for residential real estate. AM Best believes that the interests of smaller, regional, or even insurtechs like DOMA still need some time to be seen in terms of their acceptability and their effectiveness, and we intend to follow this closely and report back later.
Ann and Kourtnie, thanks so much for joining us today.
Thanks, Lori. Appreciate it.
Thank you, Lori.
That was AM Best, Kourtnie Beckwith, financial analyst, and Ann Modica, associate director, credit rating, analytics, research, and criteria. To view the full report, visit ambest.com. For AM Best TV, I'm Lori Chortis.